Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody, guys. Let's take a look at the gold market. Well, the gold market shows really strong fundamental background, fundamental performance. Because you will take a look at the COT report and speeder fund, you will see the great accumulation of the long positions. So not among the speculators, but also the hedgers have increased the short positions as insurance against the possible rally on the gold. And I will not be surprised if we will see really explosive rally within 1-2 weeks above the 18 even area maybe. So it's really very probable, very possible, because currently the open interest has reached on the gold market 1 million contracts. This is a huge position, and only on the last week traders have added 93,000 contracts. So speculators have accumulated 35,000 contracts. So this is really very big appreciation of the net long position on the gold, and it is not yet ultimately completed, so it has the room to grow more. And that makes me think that prices that we see, the price dynamic on the market, is not reflects yet the ongoing fundamental processes that stand right now on the gold market, and that's probably sooner rather than later we should get it. Maybe even on the next week we will get. Somehow, by some occasion, maybe I don't know, but the headlines on this week relates gold only to the new cases of the COVID-19. So no other events have mentioned in relation to the gold. No political tensions that we described yesterday in our Forex analysis. Not the statistics that have been published. Only the headlines, at least in the Reuters, if you'll take a look within this week, for every working day of this session, of this week, you see that gold reacts on the changes in the COVID-19 cases. So that's all. Somehow there's no other events been considered in this week. But as we discussed yesterday in the Forex analysis, we see that some important political events have happened and also support gold dynamic. We see, yes, the healthcare problems as well, and overall fiscal situation, financial situation in the world stands, really difficult. So that's moments we have described and analyzed in today's report. So on the technical point of view, I don't want to talk a lot about the current situation because, guys, this chart we saw many times in our daily updates. I talk only on the new things that we have. So, yes, we have very good fundamental background. And take a look on Friday, we've got bullish reversal candle on the daily chart. So that gives us the confidence, because if you remember, when market has completed this A, B, C bottom, OP target, we said, our major target is hit. Yes, we have another one around 1790, but it's still a question how it will be completed, when it will be completed. Appearing of the bullish reversal candle on the daily chart tells us definitely that it should be completed in the coming week. So clear that on the next week we probably will get gold around 1792. If you'll take a look at the manner how this reversal candle has been formed, that will be a really interesting moment, because if you remember when we talked about the retracement out on the OP, we said, we could accept the pullback not below the neckline. Until this level, any retracement will be okay, and it will not break the overall trading stop that we have, and it will not be out of the normal price behavior, how market should behave when dealing with this type of action that we have. And indeed, take a look at the reaction. Neckline has been tested, market shows reversal candle here as well, and it's become the part of the bullish engulfing pattern. So it means that the major upside reversal already has happened. So we stand here with this candle, with this pattern, not as a pullback inside of this drop, anticipating on a further drop. But this action is a continuation of this one. It means that for taking the position and considering possible trading here, we do not need any fib levels that stand outside of this range. All that we need is just this pattern, I mean the bullish engulfing, and the levels inside of it. Speaking on the targets, although we are waiting for 1792, the butterfly target, we should not forget that actually we have the head and shoulders. And although the OP is completed, we have another target. Its XOP is 1824. And this market, if it will continue higher, it means that XOP will become the next destination point. That's very probable. Besides, if the fundamental background and activity of the traders will be really strong, we could get just rally through the target of this butterfly. 1792 could be passed without any reaction on it. In this case, market will go to the next destination point, 1618, extension of the same butterfly, which is 1823. And take a look that it agrees mostly with the XOP. So that's what we need to consider. Our first task is to take the position. Second, we are watching for 1792 without closing the position. We're just waiting for a reaction, how market will test it. If we just pass through it as no exist, we are watching for 1824, 1880 to 1823 area. Now about the position taken on the hourly chart, that's the rally that we have based on the engulfing. For the position taken, we need nearest standing level, 1762. It will not be a mistake if you would like to take the part in this trade and you have enough of assets on your account, you're trading mostly on the daily chart, well, you could take the position by the market actually. But if you still would like to catch the retracement, I would suggest that it would be better to focus on the minor retracement because action was really very strong. Position has been increased significantly, long position. And, well, actually it could happen that market will just open with a high price and upward continuation. But if we will get lucky, market will show retracement. Take a look for 1762. And validation point will be the bottom of the engulfing, bottom of this reversal moment, 1747. So below this area, if market will drop below it, erasing of this rally, well, that will be not a good sign for short-term perspective on gold. It doesn't mean that the bullish context is over and has been erased. Not, but normal price action of the normal bullish market suggests some retracement here or maybe here, but I think that's more probable that we get just a pullback to 1762 and then upward continuation. That will be the perfect price behavior, how market should behave in current situation. All other deviation and divergence from this behavior, well, that will be not normal, and this could lead to the different consequences. We will see what they will be, but first let's focus on the basic price behavior that should happen, and let's see how it stands in the beginning of the next week.